Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Thursday. It is the 20th. It was bullish, so bullish, in fact, that about 2 minutes before the market recap was ready to officially get underway, I had an urgent restart. Of course I did. It's been a good month since I've had a computer issue. I was well overdue. So welcome out, everybody. Hi, Patricia. Great to see you as always. Hope everybody has had a great day, both in and out of the market. I imagine if you were bullish or had any bullish positions, they probably had a pretty decent day here as the S&P hit and closed at an all-time high here today, following, kind of the market getting what it wanted yesterday, right? We're still kind of right there on that edge, but officially we have hit a new all-time high on the S&P 500. On the earnings side of things, we've got a red hat tonight and then a CarMax tomorrow for our only S&P 500 companies reporting. Just a very, very small handful of other companies, including Canopy Growth, reporting, I believe they're after the bell tonight, but certainly before tomorrow's opening bell, they will be reporting as well. So not much on the earnings side. It really is, everybody's happy that the Fed might be lowering rates. The bulls are going crazy in the stock market. Gold all of a sudden is knocking on the door of 1,400, just like that. We saw our crude break to the upside and really had a nice run as well. About the only real bearish thing we can find out there is natural gas, right? They continue to stay very bearish over in the natural gas department. We'll take a peek over there. And good afternoon, Majina. Great to see you and great to see everybody as always. Let's take a look at the day that was. It was a good day for the bulls, right? We gapped on the open and we really drifted, and it looked like about the halfway point, kind of during the halftime report, it was just kind of a gap and a backfill, cheated a little bit, right? At least I call gapping up cheating. I know it's really not, but I feel good calling it that. But about the halfway point of the day, we said, you know what? Let's do it. Let's go ahead and start moving up. Buyers came into that pullback. You can kind of see our low on the intraday lined up pretty nicely with that old resistance here. And that's kind of, maybe that was a technical catalyst. Whatever it was, continued a lot of bullish momentum the second half of the trading day, really working all the way into the close. Maybe that last 15-minute candlestick has a little bit of a gravestone feel to it, but probably some day traders taking some profits. I would assume so. Yeah, I mean, everything, it was a pretty darn bullish day in the market. So we've kind of, hit the first threshold, right? We've talked a lot about this as we've been working into it. We've officially broke out today. We hit the high. We did close at the high. The upward momentum from here will be important, of course, to me at least. If we, and maybe that's as early as tomorrow, upward movement tomorrow would be confirmation of the break. Maybe we do need to, I'm not going to bet against the bulls. Maybe there is a pullback, but really even a little bit of a pullback at this point, I think you have to look at it as such as opposed to the top, at least as of right now. That is a big old cup and handle pattern right on that weekly chart. We've been peeking at it for a bit. We just need a little bit of follow through in the form of confirmation. We could be seeing that tomorrow with it being the end of the week, right? That could happen as early as tomorrow if the bulls want to take another day, and certainly wouldn't bet against them. Good afternoon, Fortino, and hello there, Peters and Emily. Great to see you guys as always. So we're going to get to challenge that resistance. Watch that high. If we can continue that momentum overnight or on the on the open, that should kind of make it easy to say, yeah, I'm good with where things are. If we struggle there, maybe break some intraday support, maybe it's going to be one of those, let's just wait till Mondays, right? You know me, I wouldn't mind that being the way it goes. So that would be fine by my standards. But hitting an all-time high, closing at an all-time high, hard to be anything other than bullish about that. We had more room to fill on the Dow Jones, of course, but we are knocking on that break. just like that, right? A lot of bullish. We thought maybe there'd be some bullish activity after yesterday's reaction to the Fed and kind of the way they worded things. And certainly today, at least, did not disappoint. Not closing above resistance, not closing at an all-time high on the Dow, but knocking right there on that door, right? So little upward movement. What that probably means is S&P is giving a little bit of confirmation by taking out today's high. Then the Dow is probably breaking out on the intraday. Maybe that could be a little bit of a double whammy that we can see going into. Of course, this is it, right? On S&P, on the Dow, these are the resistance levels. And so there is upside. Anytime you break out of a top, right, there's always some upside potential. Not quite as pretty of a candle on the NASDAQ, but certainly nothing to complain about. Higher high, higher low. Much like the broad market, we did kind of go drift down early and then rally the second half. We did see more strength in industrials than maybe tech overall today, but kind of being a little bit of a nitpicker there, I guess. Not too bad of a day for the NASDAQ either. We're not at resistance yet. We still have some room to go within the NASDAQ before we work into that 78, 40, 50 range where we will be challenging that resistance level. But again, above everything, everything is looking pretty strong, at least for the time being, from a technical perspective in my mind. And good afternoon, Pascal. Great to see you, sir. I hope you're doing well. Hope you had a good day trading. And RUT kind of still hanging around in the middle, not quite as much movement, up nearly 1% on our other indexes, closer to 0.5% on the day over in the RUT. No real reason to believe that the RUT's really any different than the rest of our indexes. We have some room until that 1600, in my mind at least, before we're running into any real challenges. So when you kind of look at all of the indexes together, we've got potentially confirmation, or at least for some traders, confirmation on the S&P break as early as tomorrow morning. The Dow so close, any upward movement probably is going to be challenging, if not trying to take out that resistance. Some room to go in the RUT without really any significant challenges, and a little bit of room to run on the NASDAQ before we bump into resistance as well. So much like yesterday, a little tougher because we've got to deal with this resistance, right? We've seen breaks that didn't continue that next day. And while that sometimes just means it happens a few days later, it usually means it doesn't happen that day, right? So we have some work to do on the S&P and the Dow to kind of get through those resistance zones. But we've got some bullish opportunities out there in the market right now, as bulls seem like they have a pretty firm control. The only thing I want to be sure to be keeping in mind is we still are in an environment, at least in my opinion, that there could be some news, that could, scare the market or scare people into taking profits. We'll see that people have really simmered down, and I don't expect anything crazy trade war news style, at least until we get through the G20. But that doesn't mean it won't happen, right? So just want to keep that in back of my mind. We kind of talked about it, earlier in the week. It's just really bullish, and I don't want to be as bullish as I feel like I'm sounding, but that's what you're seeing right now, right? It's hard not to go with the flow. So as we move into our different sectors, we were really fighting all day long, and I don't think we can call this a victory. I think it's very much like the S&P 500 in the materials sector. Technically, we closed above that 58, but we just kind of call it 58, right? We know it's kind of a zone. I do think if we can take out today's high candlestick tomorrow, that could be the momentum that maybe, for me at least, would make me feel, yeah, that is a little bit of a confirmation over in the material sector. A little bit behind some of the other areas today, but certainly nothing to complain about. We looked at a few of the pullback opportunities. Oh, there you go. Okay, got yourself a breakout going, right? Sherwin-Williams was able to show upward movement, I would argue at least, triggering into a bullish trading opportunity here today. Same with ECL, who had a little bit of a deeper pullback develop, but a nice clean candle, a little upward movement gets us above that 9 EMA tomorrow. So that could be something fun to keep an eye on as well. Not quite as much of a movement over in APD. They maybe, kind of triggered, earlier, yesterday, I would argue at least, but still a decent day, not a great looking candle, but showed some nice upward movement. Of course, we've seen these metals companies really move. Newmont gapping up and hitting a new high. I don't know what you do with that, but hard to bet against it. First real bearish day we've seen in a while on Nucor as well. So still a lot of strength overall. And I really like, especially the pullback type of scenarios. Pick your name, if you will, in the material sector. If we can get some follow through and break through that 58, I think that would be very helpful to those pullbacks, whether it's on a Sherwin-Williams or an Ecolabs or APD or whoever your favorite company is in the material sector. So very good stuff over there. And hey there, Ilka, looking forward to taking a peek at MDT when we get over into the healthcare for sure. In energy, just another decent day. We saw crude break out of that resistance we've been talking about for a couple of weeks and break out in spectacular fashion, no less. More upward movement in the energy sector. We still have some challenges, but again, kind of like we've talked, once we broke out on I guess that was Tuesday, once we took out trend, once we took out that previous swing high, that's just going to start to scare the bears away. Now, I am not feeling very comfortable wanting to join the bulls in the energy sector right now. And so it's not really an area I'm looking for, but you have to respect, at least for the time being, the bullish signals that we're getting. Now we've got challenges galore. Runs into the 50-day moving average today. We're going to have some old support zones, right? A lot of us remember how much we've danced around in this 65 area, historically speaking. There's going to be lots of challenges along the way. I'm not really there yet, but I will completely concede that the bulls have recaptured at least the short-term momentum, higher highs, higher lows, upward trend. Much like we kind of talked about yesterday, maybe this is just a deeper retracement, and I hate deeper retracements, as you guys know. If we do sell off and bears do take back control, taking out this trend line that we've now established is kind of going to be that first signal to the bearish side. I think you have to be very cautious now as a bear in energy. I think you have to bet on the bulls if you were gonna bet on it, at least in the short term. But there's so many areas that look better to me. I'm not going to mess around with the energy sector, at least for the next short time period. I'll let it play out. But there is some strength, and I know that is just me. I know a lot of people, like energy as a bull. We saw some really decent movement in Exxon, kind of trying to break, and much like some of our banks, while it's not quite as pretty, you could argue we've got a little bit of a reverse head and shoulders maybe developing here. Chevron's really where the strength has been. It's knocking on the door of a breakout, just like that, right? Let's go take a look at that weekly chart, see how that looks. That's the chart I'll be looking at if energy is going to run, I think. Big top, big top, big top, big top. Got a little work to do. Going to need probably the sector behind us, but we have actually outperformed the sector on Chevron. We've looked at them a few times, and they're always kind of the one that has looked a little stronger, right? That's an interesting breakout candidate when you look at that top on a weekly time frame. So I rephrase my previous statement. I might be interested in a breakout on Chevron if we get it. But the things, and most things, of course, within energy look a lot more like ConocoPhillips, showing those reversal signs like the ETF, higher high, higher low, but still a lot of work to do, a lot of overhead, a lot of stuff. I don't want to try to fight all of that stuff. So more things are looking like the Oxy, the EOG, the COP, the APA. So many of them look like that. And while I do have to give them credit where it's due, they have created higher highs and higher lows, and that does have to take some bearishness off in my mind, no question, and add some bullishness to your posture. Again, there's so many options out there. It is not energy, but boy, you know what? That Chevron chart, we'll look at this one again, I'm sure, in the days to come. It's been a while since we've got been close enough to that resistance, but that's a big resistance zone. If we can break through that, that might be an interesting one for us. Over in financials, the banks lagged behind again today. They didn't do poorly, but they did lag. We saw certain areas moving, and then you've got just kind of JP Morgan just hanging, Bank of America just drifting to the downside. So really, again, it's not necessarily the weakness that I'm seeing in the banks. It's certainly the relative weakness to the rest of the sector, and generally speaking, the rest of the market. They're not clean bear charts in my mind, but they just are really lagging for whatever reason right now behind the sector overall. I think we have to continue to be very open. We talk a lot about the insurance companies, and for a good reason. The MasterCards, the exchanges, those still are still the places I think we're looking if we're looking at financial sector as bulls. If we're looking for bear plays, I think it's drifting us towards the banks, even though I don't think they're tremendously great bearish charts right now. They can turn, right? Just like they can turn to the bullish side of things. So really not a whole lot new on financials. Still a little concerned with the banks, and I don't really love where they're at. They are hanging in there, and they can stay neutral all they want, right? It's just if they really start struggling, I worry about them dragging down these nice upward trends in insurance, in the different insurance companies, in the exchanges. So many nice movements have been going on over there in the financial sector, as everybody here knows. So more strength over there. On the actual ETF, not really a lot. If we can kind of clear out these little highs, and we might need the bank to help us out, before we do that. Maybe not all of them have to turn it around, but maybe a few of them start pushing through some resistance. If we can take out these little highs, and I'm just going to still this, we've actually established a really interesting little short-term resistance zone with really nothing ahead of us until we just get just above that 28, which isn't a lot of money right on the ETF, but can result in movement in the sector. I'm going to watch that resistance. I think that would be a decent little signal, and I think we'll probably need at least some of the banks helping us out to get through there. It's hard for just the insurance, especially the way it's weighted, right? We look at the top components in this sector all the time, and most of them are banks, right? Bank of America, Citigroup, Goldman Sachs, you've got a MasterCard in there, but most of them are on the banking side of things. So that might be a signal that we can keep an eye out for from a breakout point of view, and definitely some room to run. Really, there's nothing ahead until we take a shot at that pivot around 28.15, and then beyond that, there's some room to go. That's what's cool about the financial sector, and it's okay if those banks want to kind of lag a little bit right now and break out 2 weeks from now, because there's still room for us to run in those banks if and when that happens. We've got great trends in other areas. So I think we're still overall liking where financials are, just not quite as strong as maybe we would all like it to be. But as long as the exchanges, and in particular the insurance companies, they've certainly been one of my favorite areas lately. I'm all right with the banks taking 5 as long as they need to. Over in industrial sector, really one of the day's biggest winners here, kind of confirming that break, right? We kind of looked at that break on Tuesday, breaking that high here today, and really, really running. And a big part of it, of course, is the turnaround that we've seen in Boeing, right? There's really no debating that. That is certainly, we didn't have a great day, but Boeing is a big component of anything it's a part of, right? So, that is certainly showing signs of bullishness. 3M, again, one of those, been in a downward trend for quite some time, but after showing those characteristics of reversal, we're still moving, right? So some of the big names are holding up. We also saw the railroads hold those support zones, at least for today. The UNP, the who's the other one? We looked at them yesterday, NSC. And so the railroads are all kind of hanging right at those support zones, right? Kind of holding up, at least for today, pushing up. Maybe they're more neutral. Certainly they haven't broke support yet. They still will probably be on my bearish list going into next week, because those are pretty clean support levels, whether it's UNP or NSC or whoever it might be. But kind of like we talked yesterday, if we're bouncing off of the support in these transportation companies, that's going to really help out that sector too. Boeing getting back in the swing of things. Our defense sector continues to be strong. I know some of you guys work with LMT. I know I work with them as well, working up and actually taking out resistance, creating yet another swing high off of that little pullback. And while that's kind of been the favorite of mine lately, you've got Harris and 3L, both very similar, knocking on the door of a breakout as we speak on 3L here. So still more strength in this sector too. And while the industrials can, maybe be a little sensitive to trade war stuff, and probably something we should keep in mind, technically speaking, this is a good break. And we've got a little bit of resistance, right? We want to kind of keep an eye. There's really technically, though, no reason why we're not knocking on the door of $90 on XLI in my mind. That's our next real challenge. Beyond that, we've got some pretty serious overhead just north of $80. But if we look at this on a weekly time frame, that's not too shabby, right? We've got some room to go. One level, the next level, and then the next level, all of them have just a little bit of room for us to kind of step if we want to do so. Much like the last week now, certainly this week, on the support side, pretty much on anything that looks like this, primary support is going to be that swing low that we put in last week. Secondary is going to either be the breakout point, the old resistance that we've pushed through, and or that rising 9 EMA. Both of those will be areas that I'll be keeping an eye on if we do pull back. I can't say be bearish or stop being bullish on industrials or anything that looks like it until we take out the swing low. And as long as that is true, I'll be looking at pretty much everything, right, from a bullish point of view, or I'm just passing like I am, at least today, on the energy sector. Over in tech, yeah, just kind of a day. Certainly the gap was nice up on the day, but really didn't show a ton of strength. You compare it to, say, the industrial sector, for example, we really saw a lot more buying going on in there. We do have our old friend Cisco. I know, Ilka, you're watching them. I saw your reply on the Twitter on the Twitter. I sound like an old man. I guess I am. I saw your reply to the chart that we shared over on Twitter for the break. Knocking right on that door of that breakout, right? So always an exciting chart pattern, in my opinion. Again, we saw Adobe. We looked at them yesterday too. This is one of my favorite ways to play earnings, at least, where you have a response, right, positive or negative, up or down, into a resistance or support zone, and have to push through, right? They push through. Maybe they got a little bit of help from the market today, but whatever the reasons were, once they pushed through that resistance, we really got cooking. Very strong close on Adobe. Probably needs something new to develop, a pullback, consolidation, something along those lines for new entries, but a ton of strength in Adobe here today. And hey, Scott, great to see you, sir. Hope you had a great day trading. It really kind of is the same story that we've talked about many times. You look at the Cisco, and maybe you like it as a breakout candidate, maybe you don't, but you probably see it as a breakout candidate. You look at a MasterCard, we had that pullback develop. If you were trying to get in today, it was a little difficult gapping up. If you're getting in yesterday or triggered in potentially, and I think you arguably could have triggered in on Tuesday, you're probably pretty happy about it. So for the most part, things are looking pretty good in the big tech. Oracle comes out, decent little report, certainly a decent response to its earnings report here. So it's just, you look at the big names and they're looking really pretty decent. Even IBM has kind of worked, into a little bit of a reversal, right? I think you have to, again, we've taken out resistance, right now, it's at least more neutral than bearish, in my opinion. It's been spent a little time being bearish. It really just continues to be the kind of the thing to be watching, continues to be the semiconductors. And I will never remember SMH, and I don't know why I won't do that. But as you can kind of see here, kind of lining up with maybe the ETF, maybe lining up with the NASDAQ break, we're actually testing that resistance on SMH, the ETF tracking the semiconductor industry. That is a strong thing to be watching right now. A break of that resistance, then again, we've got that higher high and higher low, right? We still are waiting for that higher high, right? We've got that higher low, and we see this in so many of the semiconductor companies out there. Maybe I'm not even interested in trading into semiconductors, but that will help the market if we can, to the bullish side, if we can break out, in my mind. So certainly something to be keeping an eye on as we're moving into now next week. You look at an AMD, and again, it just kind of comes down to they're just not inspiring confidence in me. Right? I understand some of the, the AMD pullback. I understand, some of the sentiment, but I look at their charts and I see everything else going on around me, much like the banks. It's, why are you lagging behind so much, right? I might have some good reasons. They might be spot on. They might be completely off, but the price is telling me for whatever reason, they're just struggling. If I can push through that resistance on SMH, maybe we can actually start to, see some strength in the semiconductors. They've rallied a little bit, right? We've seen some movement. Intel's certainly done its part to kind of flip around, and maybe if we could break back above those averages, coming off of that support level. Still a little work to do though in my mind. So tech kind of remains, be a little cautious because semiconductors have a huge impact on the sector overall. Lean towards other areas, shying away a little bit from semiconductors. We break out, we'll talk a little bit, more about it, semiconductors. I'll open my mind quite a bit. But until then, I'm still pretty cautious when it comes to tech overall. Really am liking that Cisco break, though. I'm with you, Ilka. That thing's going to break, and if it breaks, we'll see where it takes us, right? But I'd like to be there if and when it does. So, staples, nice bounce back here. Of course, we had a little pullback, develop over the course of the week. A little bit of a turnaround candle. Nice upward movement today. Just hitting a new high point here recently. Going back into this long-term perspective, it's still kind of fighting on this weekly break, right? So things are still pretty strong over here overall in the short term. Maybe there are some more interesting areas out there. I don't know. That's probably up to the individual, right? Waste management. Well, yeah, let's go take a peek at them, Lauren, before we carry on in the staples. Waste management, nice little break, right? Kind of a traveler's, right? It kind of looks a lot like TRV, the insurance company that kind of really spent that week, over a week, hanging around just that high base, finally break through. So good call there, Lauren. That is a nice little break, very similar, right, to this little consolidation break that we've seen on travelers. I love that pattern. A little while ago in the halftime report, I heard Coach Mark say that's been a money pattern this year, and he was right. I didn't disagree, but that's always a money pattern. That's where I disagreed. That's always a great pattern. You build those seedling floors, you build that pressure, and when it pushes through, everybody can see it, right? And that's a good thing in my mind. I don't want to be the only one who can see this stuff. I want the whole world to see it, when it shapes up. So we're just seeing, back into the staples. I mean, there's not a whole lot to say that we haven't said a million times before, right? So a lot of strength. Procter & Gamble, another little potential breakout candidate, have to get rid of that pullback or that last breakout play. Maybe there's more interesting candidates out there, but certainly I wouldn't fault anybody playing an extension of this, if we continue this candle tomorrow. Ton of strength in the stock, breaking a little bit of short-term resistance. I think there might be more interesting things out there, but Coca-Cola, kind of similar, not nearly as clean as Lauren's waste management, but really a very similar type of a development, right, where we kind of make that clear top waiting to break. Coca-Cola could be on a breakout watch list. You wouldn't have to twist my arm on that side of things. Walmart, of course, been very strong. I think I like Pepsi a little bit more than Coke for a breakout personally, but they'll probably run together or not run at all. So it feels like it's just a little more organized on Pepsi to me. Walmart just continues to do what Walmart does. Really good movement on Mondelez here, of course, as we continue just to trend up and up and up. So again, maybe there's some breakout plays. We didn't really get much of a pullback, and that's really what I was hoping for in the staples, and maybe I'll still get it, right? It's just a day that we happen to hit an all-time high in the S&P, but it's still just a day. But right now it's looking a lot more like it's going to be kind of continuation of trend. If I'm interested in stocks in this area, probably looking for those little breakout type of candidates. They're not going to generally be those Cisco type of breaks that have tested multiple times. They'll be the waste management, even though I know they're not in the staple sector. They'll be the Cokes and the Pepsis that are hanging out right at that resistance zone, pushing through to give us a little bit of a signal. Utilities just remain strong. Just another day, another high here, breaking through again, kind of that same thing, right? Build that little ceiling, take that out. Good solid day again, much like the staples. There's really nothing interesting to say about utilities right now, other than if you get a good technical setup on utilities that's bullish, think about it, right? So that's about the only thing you can say about utilities, the REITs and consumer staples right now. They've just been so strong, regardless of what the market has been doing. Strong in April and March when everything was going up. Strong relatively in May. Strong here in June. So just continues to be just another day at the office for the utility sector. Over in the healthcare sector, of course, an area we've enjoyed lately for the most part, minus, well, I don't think Lilly's dead yet, but that breakdown on Lilly's not looking quite as good as it was as the sector just continues to soar, right? But that's okay. The breakouts on the other side are more than making up for it in my mind. And they're in an interesting spot. Lilly's going to be a fun one. I'll have them in my bear list. We'll talk about them. I don't know that I'm bearish on them, but I will have them going into next week with the way they're looking. But before we get to that point, XLV taking out resistance, not the greatest candle, but again, when we kind of put today's candlestick in perspective with the day that was, gap on the open, pull back the first part of the day, didn't rally as strong as other areas. There's no really two ways about that, but did hold its own using that old resistance kind of as some support. Maybe if we can take out this little short-term intraday, could give us a little bit of a kick tomorrow morning. With or without that, a pullback, I'm a buyer in healthcare. If we pull back, I'm very interested in that. If we continue movement tomorrow, I'm happy with that. If we consolidate and then break, I'm happy with that. Things are, in my mind, we've looked at many of these charts and most of them are bull breakouts, right? Or have already broken out. And that continues to be the case over and over and over again. You've got Ilka's MDT, of course, proud member of the healthcare sector, breaking through. Nicely done, Ilka. And way to be prepared. This is how you want to be with your breakout trades, right? Be ahead of the curve. If this breaks out, I might be interested. If this breaks out, where would I want to get in? So we don't look at the big breakout and say, well, is it too late, right? We all have that. Anytime I look at a breakout that I'm not in, I'm thinking, is it too late? And a lot of times, yeah, the risk to reward's just going to be gone. Even though I don't want to bet against the movement, the risk to reward's not there. So nice, clean break on MDT, Ilka, for sure. Thanks for pointing that one out. I know you brought that one to a little bit more to my attention than it was last week when you initially brought it up. So appreciate you for that one. Johnson & Johnson. Strength, right? UNH, the healthcare plans were a little bit laggy here today. I chalk it up to on UNH. We've got to contend with this 200. It's something we've got to deal with. We kind of talked about it last week when we had these on our watch list for this week. That's a nice little breakout opportunity if we get it, but then we have to think about that 200. And I wasn't going to be worried about it. I don't really generally worry tremendously about flat 200s and 50s, but then staring at me right in the face was the last time we ran into a flat 200. And so I think our real signal is going to be when we can get back above that 200. That certainly, if I'm looking at, and I like this stock and I like the movement that we're seeing in the sector. We don't have a lot of resistance. We're going to have a couple little levels, and I think we have to contend now that we've seen it move down off the 200. Anytime you see that, always assume it matters, is my thought process. But we've got a little bit of resistance, here, just kind of thinking this one out, probably, again, hopefully probably for more like a next week potential setup. But then we've got quite a bit of room to that next level of resistance in a sector that is showing strength. So whether it's this chart or something else, there's probably more things that look like it. Hard to be unhappy with even something that didn't do great today, right? Pfizer holding its breakout, continues to do well. A little bit of profit taking on Merck, but they were ahead of the curve, right? They broke out arguably late last week, certainly early this week. Pull back to that breakout point would be pretty all right. So hey, I'm glad. Anything I can catch and I'm around, Emily, I'm always happy to tweet it out. I always try to find things early in the day that might be setting up. I'm going to keep an eye on my watch list. I know not everybody likes everything I like, and that's great. I'm not worried about that. I just worry if you think it's an interesting chart, I'd like you to be, I'd like to bring it to your attention. I love Twitter for that, and I'm not a Twitter guy, but I love that I can take a picture of a chart that I think is interesting, share it to the world, and hey, if you think it's interesting, great. If you don't, no big deal. I me, I put a lot of charts out there. I'm sure some of them you look at them and say, nah. So, but those aren't the ones that I'm concerned about. I'm about the ones that you say, oh, that is interesting. So appreciate that, and always happy to do it. Even holding up, here on Abbott or ABV, we did look at Amgen here and Allergen. and we've talked a lot about them, and I think we have to talk about them again. This could be something that, technically speaking, we could look at as a bearish retracement. Now, I wouldn't. It's too much momentum to the upside. But if you are, the one thing I would say is, with that news of the split, keep that in mind. That is kind of what sparked this turnaround, was the rumblings. I still haven't seen confirmation from the company that they're splitting, but it seems like, where there's smoke, there's fire. And I think that's probably the case here today. I don't really think this is a great bearish retracement candidate personally, independent of that news. But on top of that news, I've seen in days gone by, sometimes when we get an announcement for a split, you really move. I've seen some crazy things. Some of those companies don't exist anymore, but I watched a company double in like 2 months. Titanium Metals, back in, I don't know, 2000 and maybe 6 or something like that. They announced the split, ran up for 2 months straight, and then after the split, everybody sells it. And I don't know exactly what it is. Maybe it's maybe it's just a psychological thing. But with that news on Allergen, I think if we're looking at them from a bearish point of view, I think we have to keep that in mind. They're at a big resistance level, and I could understand why someone might look at them bearish, and they might be bearish, right? I'm going to shy away from it because of that news, but keep that in mind. That was going to be an interesting one to follow. I think an Allergen right now goes on a follow. Don't try to trade it personally. On Lilly, on the other side of things, working back after breaking to the downside, working into these resistance levels, we're still in the downtrend, right? So this could actually work into a potential bearish retracement in my mind, because we've still made lower highs and lower lows. Saw some bearish movement here today. Now, I don't really expect to need a lot of bear plays, but I do expect to want to have bear plays going in to next week in particular. The market's showing a ton of strength, and I will be bullish, barring something weird happening tomorrow. I'm going to need bearish candidates because I think you always should have bearish and bullish candidates. This might be one where, if we see some downward movement, could be looked at as a bearish retracement. If we see some downward movement and catch a higher low, then we can say, okay, we're back into neutrality. And if we break this resistance, we're back on there's a lot of upside, right? And with the strength of the sector, I'm almost thinking that might be how it goes. We see a little pullback, we create a higher low, and then ultimately challenge that resistance, giving us a bullish breakout opportunity. So a little bit of a short term, I guess how you play it matters. If you played it on intraday, it was really good. If you played it on swing, you probably hit your stop loss or getting pretty close. Or if you got a credit spread, you're up at 120. And that's kind of how I was thinking about it. So that's about as ugly as it gets, though, in healthcare right now across the board. We have to, there aren't a lot of tremendously bearish looking charts out there right now. And it shows when you look at the ETF, right? I mean, it's moving and shaking. And while the exact way that we get there, I don't know, a straight up is on the table, in my opinion, probably more realistically a pullback consolidation step style towards that. I expect at this point in time, at some point in the not terribly distant future, to be talking about a break of 96. Quite honestly, in healthcare, I continue to have a pretty darn bullish view on it at this point in time. Hard to sell me otherwise. Yeah, not the greatest candle today, but broke resistance, right, above everything except for one last, and it's kind of a big one. 96 was a double top, right? So that 96 is something we'll want to keep an eye on, but not really a lot of resistance until we get there. So we do have some room between here and there. Over in discretionary, knocking on the door, we can go ahead and still this guy here, knocking on the door of a break on the ETF. And that certainly has been helping out pretty much everything within this sector. I would imagine if the market's bullish, so is generally speaking the discretionary sector. Much like we've talked many, many times, I will continue to shy away from the things that are kind of Lobies, right? The Kohl's and the Macy's and a lot of the brick and mortar type of companies, and be very open to, and maybe not this very second for a new trade, but very open to a Starbucks. And maybe you could argue, break of resistance, if you really want some Starbucks, that would be an entry that I think you could take. I'm open. I'm happy with overall where we are in this. Still, when you compare it to some other areas, we're showing some signs of life in low finally, but not nearly what we're seeing in so many other areas. So I'm not going to go out of my way for new trading opportunities in this sector going into next week, but I'm very open to them on either side. But yeah, and I mean, I'm not going to fault anybody looking, whatever your entry technique into a Starbucks. Well, it's been a good way to go about it, right? So it's been really hard to not make money buying Starbucks for quite some time now. So yeah, I think Starbucks belongs on a list, and anything that you like that looks like this, I would 100% agree with that. Ilka continues to have a little bit of a pullback on Target though, and this was kind of an interesting one going into potentially tomorrow, but more hopefully at least next week. Little bit of a pullback. And kind of thinking it through, if we get some signals, we get the market to break out, we're seeing the sector break out. This, I think, could be an interesting pullback candidate. A lot of movement, a lot of strength off of that, earnings report as well, right? And we're kind of, while it's not picture perfect or anything like that, you kind of see we're trying to catch our general support zone at this old resistance zone. So this is kind of an interesting one. Not a ton of pullback opportunities in the market right now. Kind of an interesting one to keep an eye on. So that is where we find ourselves over in the discretionary. Really not much has changed. Overall, I think it remains bullish. We just be careful. We don't try to bottom fish, if you will. The stocks that, they're going to catch up. Maybe they will, but if we're going to get some good signals and some better opportunities before too long, right? We don't have to force the issue. REITs, again, just continue to do what REITs do, which is generally go up. So, hitting a new all-time high here today on XLRE. That, of course, is trickling down into pretty much not everything, of course, that's an absurd exaggeration, but the sector as a whole, with absolute certainty, just continues to be a strong, strong place. And again, much like utilities, when we see setups in these areas, whether we take the trade or not, I think that's, a debate, but I think being open to, setups in real estate and utilities that do develop, I think that is something that we should all be doing is, when we see whatever stocks in those areas we follow, make that little high base breakout or actually have a little bit of a pullback, give them some thought, right? I think they've earned that from us, if nothing else, right? So, but nothing really new to report on. REITs continue to be tremendously strong, tremendously bullish, in no two ways about that. And of course, over in XLC, continues to just be XLC, I guess. So you look at XLC and you jump right over to Facebook and then you jump right into Google, right? Saw some upward movement, much like the market. I could get it. I could get it if we continue this, upward movement tomorrow. I understand if people are calling this a pullback and would call that confirmation. I'm not going to do that, but I would understand if you did. There's just so many better things out there. And that's what I feel about this market. There's so many opportunities all over the place that we don't have to really step tremendously out of our comfort zone to find them, right? I'm not sold on energy. Well, there's a lot of other options. I don't have to worry about it. Maybe I'll see something that gets me comfortable next Wednesday, right? Same, really, same situation in this sector as a whole. Facebook, while you have to respect it, it has shown some reversal. I think you're probably much better suited to start thinking Facebook on a breakout personally. Breaking that resistance, then maybe we can talk, but that's probably what's going to need to happen for me. If we see upward movement, though, I could understand it. We're in that challenge zone here on Google, old support, 200-day moving average, sitting right on top of us, going into a weekly, maybe going into a weekly time frame, kind of sitting right below that falling 9-weekly moving average. This chart has an awful lot of work to do, in my opinion. But again, much like Facebook, has shown some signs of life. Still, in my mind, pretty darn scary to chase after Google, I think. But that's just me. It's just this sector continues to be very lackluster to me. And until it kind of comes around, I'm going to continue to say that. Now, with that being said, there's always a good chance there's something in any sector that's catching your mind, right? Even Chevron changed my mind on energy. Disney is one of those companies, for me at least, in this sector as of right now. Potential breakout candidate. I think they belong on a bullish breakout watch list personally. We are continuing to see pretty decent strength and running into resistance here on Comcast. Well, I don't think that's as pretty of a breakout. I think it is still a breakout candidate, right? If we break through that resistance, Comcast isn't a particularly fast mover, but that's not necessarily a bad thing, right? So knocking on the door of resistance. Charters held up pretty much throughout everything as of late. Netflix bouncing back a little bit, but still really, really sideways. EA, the video game companies, still really sideways. I still really like a breakdown on EA if it ever happens, but it has to happen, right? And right now, I'm just going to assume EA is going to stay in this range forever. So not a lot of great things jumping out. That Disney breakout is interesting in my mind, but that's about the only thing that's really jumping out to me in that sector. Probably the only thing that I'm going to keep on my watch list, at least for early next week. So that's where we find ourselves. Whatever area you like, I mean, we're seeing strength, right? I'm shying away from what I'm shying away from, but mostly it's because I like other things better, right? We're seeing breaks, we're seeing challenges of resistance. We're going to have to keep an eye on how we deal with continuation on the S&P tomorrow. Or maybe we need a little bit of a pullback, and that would be okay too, right? We may not complain about that. If we break through, how does the Dow respond? It's coming right behind it, right? It's lagging a little bit technically right now. Then we're going to have the NASDAQ lagging a little bit behind the Dow. And then, of course, lastly, with more room to run will be the rut. So we kind of have maybe some dominoes stacking up, but on the same time, we've got 3 resistance points that could push us, at least short term, or cause us some trouble. So still think as we're moving into next week, or, at least in tomorrow, and barring something weird next week, we're going to have a pretty darn bullish skew on the market. I think most traders probably will. Looking at the dollar, continuing that selling here from yesterday. Now we're in a really interesting spot. I would argue if this 200 gives out, and I would say that was confirmed by the break of our swing low on the dollar index back here on our last bounce. And I'd say a close personally, but that is just me. That's a pretty bearish signal in the short term. And so this is an important support level. The 200's held, right? I'm not betting against it. Not going to be that guy. It has been, people have bought it off of that over and over and over again. And this is kind of a, quick reaction to the Fed. Overreaction, I don't know. Generally, I always think it's an overreaction, but that doesn't mean it is. So keep an eye on, that's going to be put us right about 96.50. There is room to the downside, at least short term, on the dollar if we do give out on that support level. In my mind, on the resistance side of things, pick your thing. Short-term moving averages, the downward trend line, the swing high from earlier this week. Lots of potential resistance catalysts. Looks to me like if this support holds, we throw it right back into neutrality and still wait for, hey, if we ever break above these highs, that's still going to be a good breakout. That's what I love about breakouts. Get your confirmation candle or you don't. It's going to be a breakout 3 months from now if that's how long it takes, right? There just might be a breakdown between here and there if that's the way it wants to go. So certainly an important price point in my mind. Now, we saw some awesome movement in our commodities today. Gold, after doing the dance at 1350, just breaks out and flies, right? Knocking on the door of 1400 just like that. And if you look at this on a longer term time frame, there is a lot of room, on gold to still move up. Not necessarily specifically tomorrow, but I wouldn't bet against it, I guess, at this point. But we've got a lot of room, really, until 1500. There's not really any resistance that scares me from 14 into 15. So again, I mean, this is a great candlestick. Hopefully you own gold. If you didn't, that's okay. You'll get another opportunity. Mostly, hopefully you weren't bearish, but I don't know why you would have been bearish on gold. I don't know that anybody I've talked to has been bearish on gold. It's just how bullish have they been? And that is a very strong break, really heavy volume. Just another bullish signal for gold. Looking for new entries, maybe maybe a pullback, maybe a little consolidation, even if it's just a couple days, and then break to the upside could be something that we can keep an eye on. It's always tough after a huge candle, right? Unless that's really at the perfect place, right? If there's a huge candle, right at that resistance zone is a little easier, but always tough to go, want to buy that next day, even though you look at any candle like that and say, yeah, that's pretty bullish, right? So, of course, silver got in on the action here today too. Cleanly breaking, in my opinion, everything that was really holding me back from having a bullish or at least an open bullish mind. Hey, Walt, good to see you, my friend. Welcome. Hope you are doing well. We're gonna have a little bit of resistance, about 1560, and beyond that, we have some really, in my mind, some little stuff, sure, but quite a bit of clear air. This was actually a really good signal, as cool as as awesome as it was on gold, because I think most of us are probably or have been probably working with gold, at least relative to how many of us have been with silver. This was a big candlestick from a technical point of view for silver. In my mind, I'm finally at the point, and I don't know what I'm going to need to see, right? I'm not buying silver tomorrow morning, but this was enough to get me to finally say, the things that have scared me, most notably $15, but, we've looked and talked about all of them, right? 15 and a quarter being one of them. We really won all of that here today. So I think as we get into next week, we'll just see how it develops. I think this is a tough one to chase after personally, technically, from a technical point of view, just buying silver, I could understand that, but technically maybe an entry above this resistance level could be in play. Probably would be nicer if we saw some pullback or something along those lines, but certainly a strong day in the metals market. A weekday, we have to go all over the place. There's always something bearish, right? There's always something bullish, always something bearish. And our old friends at natural gas, well, they were about the only thing that was, that's bearish today. But continue to struggle after breaking yesterday, more follow through today, more heavy volume. This is just a very bearish place, right? There's no real reason to beat up natural gas any more than they've been beaten up, but this is just a very, very bearish place to be right now, and will continue likely to be so until we're able to establish some sort of a support zone, right? And well, where might that be at this point? $2, might be, because it's a round number. There's not a lot of history, on the chart. I don't know why anyone would be wanting to run out and buy some natural gas when they have the entire rest of the world as an offering to them. Certainly will not be one of them. I'm sure you guys won't either. Just continues to be very, very bearish. We can continue to watch the falling moving averages. We can also continue to watch. Sometimes this is the easiest way to trade anything, but especially commodities that kind of a lot of times will move fast and then do nothing, and then move fast and do nothing, right? We see that quite a bit in the commodities market, in my opinion. So waiting for these little floors or ceilings to develop and then pushing through them can be one of the easier ways to trade them. And instead of driving yourself crazy looking at the middle, you at least have a game plan with them. But still very bearish for sure in natty gas. And we're on the other side of it. When we took out that resistance level, I guess we were not the only ones looking at that as a turnaround point, as a potential entry for the bulls, and certainly an exit for the bears. Breaking through that, a ton of movement here today. Very good, much like silver, very good candle for some short-term upward movement developing in the days to come. Now, again, much like silver, if you're not here today, you're probably waiting for something new to develop. Again, maybe you're okay jumping into a trade after a candle like this, and it's not necessarily doesn't make you a bad person. Certainly, if you are, I know I'm not comfortable doing that. So it's kind of waiting for that next swing to develop. We now have a W. We've now broken resistance after recapturing the 9 on Tuesday. We've now recaptured the 20. There's going to be challenges, right? Now that's just the way it works. When you break to the downside, I would argue this 58 zone that we kind of used today on the intraday is the first one. This first challenge is going to be this 58 zone. We've got breakout points there. We've got retracements there. We've got breakdowns there. So exactly, Ilka. Opportunities will always develop, right? And that's the thing that I think you have to accept as a trader is it's not about what you don't trade. It's about what you do trade. Who in their right mind wouldn't have wanted to own gold today? Everybody, right? Or bought into crude right on the open today, or bought into Adobe, or there's lots of things. You can't buy everything, right? There's only one you can only be following so many things. You only have so much money that you're putting into the market. It's not about what you don't trade, it's about what you do trade. right? Everything will give us an opportunity eventually. Beyond 58, I think we have to keep a close eye on that 200 period moving average. So I don't think, a continuation tomorrow is exactly what we want to see if we're looking for new bullish entries in crude. If we're already in crude, we of course want to see more continuation going into tomorrow, but things will develop. A lot of times that 9 will catch up, we consolidate, we pull back, we'll get another opportunity, but certainly a bullish signal. And at this point in time, still from a bearish point of view, that really hasn't changed. If we ever do give out that support, it's just a lot less likely to happen in any short time frame today than it was yesterday, right? But that is still an important support zone, maybe even arguably more so because of how much we did move off of that support zone. A lot of money came in and bought it just north of $50. Whether we agreed with them at the time or not, they did it, right? And so that is clearly an important price, but we're a ways away from that before we get into even talking about that. I would expect it to try to remain strong. We kind of a little bit of a challenge area here right now. Something will develop, right? We saw it time and time again when we first saw reversals back on energy. The first big run I missed because I'm never going to be trading into that for better or worse. But then things developed. We got a pullback. We went into the little consolidate, break, consolidate, break, consolidate, break, consolidate, break mode for a while. It was actually pretty easy to kind of work with crude for that little stretch. Something will develop in the days to come. So certainly a fun day. Hard to be unhappy. On days when the market hits an all-time high. Generally, if the market's hitting an all-time high, you were probably skewed to the bullish side. And if you weren't, you might have to reevaluate your perma-bear nature. Because usually you're not that far away from an all-time high yesterday if you hit an all-time high today, right? So it continues to show a lot of strength and resolve in the market at this point in time. I think going forward into, obviously tomorrow, but into next week, we'll see how we close on, on the Dow and on the S&P. That'll certainly, impact where we're going early next week. But I think going, at this point in time, assume to continue to be more and more bullish. There's going to be great opportunities in all sorts of areas, right? You pretty much pick the sector and there's really good opportunities. Keep in mind that, just because it's very strong to the bullish side right now, and I think that's how we should be looking at it, we always want to have some bearish trade candidates, right? So whether it's support breaks on some of the railroads or pullbacks on things that you're finding or whatever it might be, it's important to have some of them. So if we do, and again, I don't think we're going to, but that doesn't mean we're not, if we do sell quite a bit, because hey, make no mistake about it, as great as today is and as strong as it looks, we haven't confirmed anything, right? So we're just at resistance, right? And the S&P, we're just at resistance. I don't think you can say that we've confirmed a break. So do I expect us to put an honest effort? I absolutely do, and I'm preparing accordingly. But that doesn't mean that we've confirmed that break. So if this resistance does end up causing us some trouble, we want to make sure we have some bearish trade candidates in the back pocket. Maybe we won't need them. Maybe we hope we don't need them, but we probably should have a few in the back pocket just in case we do. But I think probably more likely to have a lot more bullish breakout candidates in your list, if you're me at least, going into tomorrow. So ladies and gentlemen, that is going to do the market recap for today. But as always, thank you all so much for your time. I appreciate you joining me. It's always more fun to do this with you guys than on my own. So thank you for hanging out with me, talking trading. We've got our cash flow club tonight. I think Coach T is going to be doing that, talking some Condor. So for all of you cash flow Condor crew out there, enjoy that. That should be a lot of fun to build out some Condors. If you are new around here, of course, we always invite you to subscribe to the channel, hit the notification bell. Join us at Tackle Trading on Twitter. Join us on Instagram. Head on over to tackletrading.com. We can get you hooked up with a free trial. You can see what it's all about. Of course, you can always find me at FrankMartin23 on Twitter as well. Never too terribly far away. I always love to hear from you guys. It's always fun to be able to kind of stay in touch, in that way. that is always, it's convenient, it's fun. I didn't think I'd like Twitter, but I've, because of Team Tackle, I love Twitter. And that's where it begins and ends on Twitter for me, but you guys make it a lot of fun. So thank you all so much. It's certainly my pleasure. Thank you for joining me. Thank you for catching the recording a little later. If you're doing so, always appreciate that as well. You guys get out of here. Go enjoy the rest of your Thursday afternoon. If you're doing the Cash Flow Club tonight, have a great time in there. Hope you learned some new tricks. We'll pick up, see where this market takes us. We'll take a peek at maybe some of a sneak peek at a watch list for the scouting report meeting tomorrow here as well. We usually like to do that on Fridays. Anything that's kind of jumping out, we'll take a peek before I go try to sell it to the coaches in the scouting report meeting tomorrow. So thank you guys. Thanks, Scott. Thank you, Micah, Ilka, Patricia, Walid. It's always my pleasure, guys. Get out of here. Have a great Thursday afternoon. I will see you same time, same channel here tomorrow. Bye, everybody.